Hello and welcome to the Rev View. I'm Andrew Riddle. Top story from last week, earnings season marches on. More than 60% of the S&P 500 have reported earnings now, and over 70% of those companies have topped their estimates. And not just by a little, they're beating their earnings estimates by over 6%, well ahead of the 5-year average. Companies are also beating on sales and revenue estimates by a wider margin than the trailing 1-year and 5-year averages. If this trend continues through the rest of earnings season, this will be the best quarter versus estimates in nearly a decade. Now, to put a little perspective on that, estimates didn't set the bar particularly high this quarter, so it sort of feels like the economy must be in overdrive, and it really isn't. But it's been a very good quarter for earnings and a very good quarter for investors. Other big story from last week, Apple. Hey, it's always exciting when Apple reports earnings, and a lot of people actually thought this past quarter for Apple would be weak. This, of course, is the 10th-year anniversary of the iPhone, and a lot of people, including me, expect Apple to launch some incredible phone at some point this fall. And a lot of people, the idea is that they're holding on to old iPhones waiting for this amazing new iPhone. And I'll confess to being one of those people. But 41 million people didn't agree with me because that's how many iPhones Apple sold last quarter, with particularly large bumps in sales coming from Asia, Latin America, and the Middle East. Apple absolutely crushed their estimates, and the stock rallied over 6%. At this point, Apple's really redefined big. It's hard to even put it in perspective that Apple has sold 1.2 billion iPhones. Apple Services, which is the division where they hold iTunes and some of the things that frankly most people don't even think very much about with Apple, is now a Fortune 100 company by itself. Apple has $261 billion in cash according to this most recent quarterly call. To put that in perspective, Walmart, the entire company, is worth $244 billion. In theory, Apple could buy Walmart in cash and still have about $20 billion left over to buy a Apple yacht or whatever it is that interests them. In terms of economic indicators last week, there were 3 of note. 200,000 jobs were added in July. That's a very good number and beat estimates, a recurring theme. We had June readings from the Institute of Supply Management that showed continued business growth, which is also very good. The low light last week was a negligible advance in consumer spending. It only was up about 0.1% versus estimates of 0.3%. In the markets last week, we saw the trend from the last couple of weeks continue where the Dow was outperforming the S&P and the NASDAQ. The Dow was up well over 1% last week, the S&P up about 0.2%, and the NASDAQ actually walked backwards about 0.3%. This week, got a lot more earnings coming, including some of the big entertainment companies, Disney, 21st Century Fox, CBS, to name a few. This week, we're also going to get our first real good look at inflation in a while when we get producer price index numbers and consumer price index numbers. So stay tuned. Come back and visit with us again next week, and we'll tell you how all that went. Thanks.